Hey Girl Talk family, this is your host Charline, and today in studio we have Dustin Woo. Dustin is the owner of LPW CPAs, a professional corp. Dustin is a certified public accountant, and today he's here to talk about taxes. So we're talking to all of our 1099s, we're talking to all of our entrepreneurs, we're talking to all of our W-2 employees. We have advice for everyone, so stay tuned. Hey Dustin, welcome to Girl Talk. How are you?
Good, how are you doing?
I'm good. We are so happy to have you here. You're going to alleviate a lot of stress for a lot of the people who watch our show.
I hope so.
Yes, because we're going to be talking about taxes today and how to make things easier when you're preparing them, and also what to look for and what are some of the new tax laws that have come out recently.
Sure.
So let's jump right into it, okay?
Okay.
So I have my questions here. So now, as far as our business taxes are concerned, and that's a lot of the people who watch the show, what are some questions we should ask when we're choosing a CPA to do our taxes? What are some questions we should ask them before we make a choice as to what CPA we should use?
Well, the first thing is to see whether they have enough capacity to bring on new clients, right?
Right.
You just don't want anyone to just bring one new person on and then, not be able to do your return next year, right? You
Right.
kind of want some consistency.
Right.
So if they could bring it on, then, kind of see how everything's all set up in their office.
Mhm.
If they, have enough staff to help, keep them up, if they're kind of up to date with, their computer systems to make sure there's security for you. And, just so you don't have random people walking in.
Right,
That helps a
exactly.
lot. But yeah, and then some of the questions that you just ask them is how are you available? Are you're available year round or just tax season? Is someone at your office? July, June, October, November. If there's random notices or questions that come into play.
Right. You're absolutely right, because some offices after tax season shut down.
Yeah.
And there's no one available to talk to you about anything until they come into September,
tax season.
October,
Yeah.
right? And so you want to make sure that whoever you choose, especially when you're an owner of a business, you want to make sure that the tax person you choose or the CPA that you choose has availability outside of tax season, right?
Yes, definitely. Yeah, everyone has to understand that we're normal people too. So,
Right,
so
right.
we may shut down for like a week or so after the first tax season.
Heck yeah,
to
you need to.
recover. But
Yes.
generally, there's going to be people that should be open in June and July because business never stops.
Exactly.
Right? So there's always quarterly filings, either payroll or sales tax. Right. So someone needs to be somewhat available throughout the year. June, July, that's usually the time where I tell most people I'm on vacation.
Right.
But it's only like a week. It's not like 2 months.
Yeah.
So yeah, they need to be around.
Okay.
That helps the most.
That's perfect. Now, what should we start preparing to send to our email or take to the person who's going to be preparing our taxes? What are some of the things we should make sure we include in that stack of information that we're giving to our person?
Don't give a shoebox of receipts. That's like the old mentality, right?
Right.
Now things you could be Excel, some
Yeah.
kind of electronic format of all the expenses that occurred.
Mm-hmm.
But that's one. The other parts are all the tax forms you get.
Uh-huh.
So if you run a POS system, make sure you get the 1099K
Yes.
from the merchant service, just because the IRS sees that, and if your numbers don't match that 1099K or other 1099 miscellaneous, you'll expect a letter from IRS saying,
Okay.
hey, this is what we have in our system, this is what you showed, this is the difference, this is the tax we assume you're owing. So make sure all your numbers tie for any kind of tax forms. So then at least you could prevent that part.
Right.
Right. So,
Right.
because everything's all computer automated at IRS. There's no one really looking at your return. So
Okay.
one thing to prevent is make sure the computer checks everything in line with your return, with what you received.
Okay.
Yeah. So
Okay.
so even though, let's just say um, on your software or
Mhm.
your downloads that you get from like QuickBooks Online, it'll only match what gets deposited in your bank,
Mhm.
but doesn't record the merchant service fee as already get taken out.
Right.
So like the 3% that is charged on your income, you need to add back that 3%. So that's just a
Right.
little thing. So tax forms, any kind of tax notices if you received any, and then any filings that you did, like the quarterly tax returns, sales tax returns,
Right.
payroll tax returns. If you filed those, make sure you give that to your tax preparer.
Wow. Tax season always makes us anxious and nervous to make sure we get it all right, because we don't want that letter coming saying,
Of course not.
hello. Now, we talked about this a little bit too, to make sure that whoever the tax preparer is using a secure portal when you're transmitting your information to them, right?
Of course. So yeah, identity theft is big now. So you want to make sure that the preparer has some sort of online portal that either deletes all the uploads that
Mhm.
you do within like 30, 60, 90 days, some sort,
Right.
right? So at least then it kind of gets erased from
From
the cloud, so to say,
Right.
right? If they don't have that, at least have some sort of password protection encryption that you could do on those PDFs that you send.
Mhm.
1234 is not the best password.
Think of something else. Dig a
Um,
little deeper.
And especially don't put your password in that email. That
Oh, that's-
specifically,
yes.
let's just say that's nicer for those thieves,
Yeah.
right? So, secure password is good.
Mhm.
Portal's good too. Just make sure the preparer is up to date with at least the encryption side
Right.
of their browser, internet, and things like that.
Now, what are some of the new business tax laws that we should be aware of?
New business tax laws.
Mm-hmm. Are there any?
So now for at least like employees that receive W-2s, they removed all that unreimbursed employee expenses. So that specifically is hurting a lot of people who, spend a lot in their jobs to, salespeople, for
Right.
instance. If they're W-2'd, but they go out and entertain their clients without, the company card, or buy supplies or pay for gas for going to meetings,
None of
all that is
reimbursable?
non-deductible anymore.
Wow.
And it was from the last
Right.
year, 2018 is the first
Yes.
year that happened. 2019's continued. So it's a little harder now that people have or the tax laws have changed to remove
Mhm.
that. That's some of the downside for the new tax law.
Yeah, that's unfortunate. I think a lot of people got stung by that last year because in 2018, I'm talking when we did our taxes, because employees weren't able to make those write-offs anymore. So that was a big deal.
Yeah, and then another update from last year, of course, was the state tax limitation or state and local tax. So if you itemize your tax deductions on Schedule A, your state and local taxes such as property tax, state tax withholdings, and DMV registration tags are limited to 10,000 only. So Mary filing joint is hurt the most because
Right.
it's not 20,000 because it's 10 and 10. It's just 10,000 for everybody.
Ouch.
But the good side is the other
Please
part,
tell
if
me
you
the
think
good
of it
side.
is there's no or the threshold for AMT, which adds additional taxes
Uh-huh.
before is it kind of gets pushed off to higher income brackets. So
Okay, so it
for
kind of
most
balances
people,
it out.
that's their thing that they said would balance the tax law. So some people in the middle class were hurt a lot because of AMT. They all either
Mhm.
have too much state tax, property tax,
Yes.
and then some people who have a lot of miscellaneous deductions, the 2% miscellaneous,
Yes.
before were hit with the AMT. So now a lot of people will see that the AMT is removed, just
Right.
that you have less tax deductions. That's the only
Less tax
downside.
deductions.
So
Okay.
there's a little give and take there.
I'm starting to get stressed, Dustin. I'm starting to get stressed. Now, when we talk about extensions, because we talked about this a little bit too.
Okay.
So does it, when, our taxes have to be filed by April 15th?
This year, is actually, for 2020 filing, is actually April 15th this year.
Right, it actually is the 15th,
Yes.
right? So now, because we have to file by then, those who get extensions that just could not get it together by by the 15th of April, for whatever reason, and they need to file an extension, if they owe taxes, does the payment go with the extension? So in other words, if they extend out, do they get to pay what they owe later?
No. You have to actually pay by the extension date, or at least have a good faith estimate of the amount you're going to owe.
Okay.
And then if there's some due later, you'll still pay that later, but we have to have at least what you expect to be paid in by April 15th.
Because if you don't,
Then there's always penalties and interest.
interest.
Yeah. So
Penalties and interest.
that's what we try to avoid, because
Right.
basically you're just
Giving money away.
giving money away. You're not earning any extra percent of interest in the bank right now, because those rates are a lot lower than IRS interest rates.
Absolutely.
Right.
Definitely. We're trying to avoid getting stung here, guys,
Yes.
right?
Yes,
So,
exactly. Let's not lose any money that we don't need to
Please.
lose.
now, personal.
Oh, sorry. Let me
sorry,
go
go
back.
ahead.
Even though you put in more money than maybe you owe later,
Right.
you will get that back, right?
Uh-huh.
So sometimes it's okay to overestimate.
Yeah. Because
So-
at least that's a check coming back to you versus you having to write another check and including penalties.
Yes.
Okay.
Yes.
So give them more.
It's hard to say
estimation.
yes. It's hard to say that
Now,
yes.
It was hard for me to say that, Dustin. It was hard to say, but we're trying to be safe here, and we don't want, like, later on in the questions that I'm asking, the reason we're asking these questions, and really the reason we're providing this information, is so that people don't get burned by doing their taxes. It's enough to be an entrepreneur. It's enough to be 1099. Or an employee and 1099, right? So you have this dual thing going, and then you're trying to make additional income, and then to get burned in the end because you didn't know what you were doing, concerning taxes is just not the way to go. So that's why I wanted to do this show, and that's why I'm thankful that you were able to come on during this busy season to give us these helpful hints as to what to do and what not to do. So thank you. So I have another question, of course.
Okay.
A lot of my viewers, speaking of, multiple streams of income, a lot of the viewers have multiple streams of income. Do you think it's wise for them, how there's all these online automated tax systems that you can do yourself.
Mm-hmm.
Is that wise for them? I know it may be wise for, in my opinion, here I go, for people who are 1040 because it's a little less complicated. But when you're 1099 and you get a 1040, do you think it's wise to go online and do your taxes? What are your thoughts about that? W-2, sorry, and 1099.
It all depends on the person, right?
Okay.
There's always budget limitations. So
Right.
the only thing is don't rush to do it.
I see.
Make sure you do it ahead of time. I think you could save it, for X amount, because if you log in, you can save your return that you prepared. The online software, or even the software you buy, has a good step-by-step process. The only thing is you have to watch out what you put in. Make sure there's evidence for you to support those numbers
Okay.
somewhere, right? And then make sure you don't put those numbers in twice, because sometimes
Right.
I see a lot of duplicates. So they may ask different questions, and you may think, oh, this applies to this, but you definitely don't want to duplicate things, because it's going to look odd. Also, the same number shows up twice, and then if it's multiple times, then
Red flag.
you have something that you should have been showing income, and it shows a loss,
Ooh,
right?
yeah.
So, online, it's fine. Those things I think are good.
Mm-hmm.
You just have to do your diligent part in checking it later.
Yeah.
Don't just put it in and think, I'm done. Always review it afterwards. Like any other type of things you submit.
Right.
just be cautious in what you're submitting, right?
There's a lot of people who are looking at buying homes now. And so, they may have a 2-year plan or a 1-year plan and they want to purchase a home. And in order to purchase a home, you have to qualify. And so when you are a business, there's a lot of things you can write off that makes your income lower so that you can pay less taxes. So what do you think a person should do when they're thinking of purchasing a home as far as filing their taxes are concerned?
Well, one thing to make sure is you report all your income,
Yes.
right, and your expenses,
Mhm.
of course. Now, it's going to be a double-edged sword if you want to report more income so you get a higher loan, right?
Right.
Because now, if you're reporting more income, then there's going to be, of course, more taxes.
Right.
Like a lot of the mortgage companies, they judge it based on net income. So just because you increase your gross, well, your expenses kind of stay the same. So that means your net income doubles or however it goes up, right? And then that's where you're going to pay, if you're Schedule C, more self-employment tax along with income tax, right? Or if you're other entities, then more income tax. So it depends on your scenario. I would say talk to your mortgage person to make sure things are going there.
Exactly.
But be prepared for the tax part if you're increasing your revenue.
Right. So that's one of those questions that is really, like you said, it's a double-edged sword, and depending on what you're trying to accomplish would determine what your actions are. But as a mortgage banker, I always say, make sure you're in line with what your accountant, CPA says also, because what you don't want to do is raise unnecessary red flags because you're trying to accomplish something like purchasing a home. It's not worth it in the end. And I think that's the biggest takeaway I'd like for people to see, is that you may, get to reduce your tax threshold here to go do this, but with the IRS, you can't win if they start looking into the amount of money you made versus what you're reporting.
Exactly.
Right?
Mm-hmm.
Yeah. So another question for Dustin. So sole proprietors, I have a lot of those that watch the show. What are some things that they can write off that we may be overlooking when they work out of their home?
Well, a lot of things like just travel, right?
Mm-hmm.
You're not going to stay home 100%.
No.
So, one thing first is like if you go and pick up supplies, go over to meetings, all that auto mileage is deductible. So, it's not just one way, it's there and back, because your home office is your location. Right? So that's one thing. Second thing is home office, right?
Mm-hmm.
So your home office comprises of a bunch of factors, right? One is supposed to be exclusive use of a location.
Yes.
Right? So it doesn't have to be necessarily a whole room. It could just be that specific area, your desk, right? Your chair, computer area. So that divided by your whole square footage of your house, your apartment, if it's either rent or mortgage, it's percentage-wise, you could use that to deduct.
Yes.
So utilities, water, gas, trash, HOA also, electricity, even like home insurance that you pay. If you're a renter's insurance.
Right.
Percentage of the business use of that exclusive area divided by the whole living area.
The whole living area, okay.
That percent times with those expenses, you get to deduct that as your home office. So it does help in reducing the self-employed income too.
Absolutely.
Right?
Yeah.
So that's self-employed income is already 15.3% on top of your income tax.
Right.
Right. So you expect that part. So like similar to an employee pays 7.65 for their portion, and an employer pays the other 7.65.
Right.
But as a self-employed, you're what? Both the employee and the employer.
That's right.
So you have to double that.
That's right.
So expect that part. So it's always based on the net income. So yes, additional expenses help out to reduce that side. So that's some of it. Plus some of the supplies you may use for your office. Let's just, or for your business, then that's always deductible. even though you may not think it is, but like the paper you're using.
Exactly.
Right?
For your printer, your everything that's office related for your business all can carry a portion of tax deduction that will help you.
Yeah, especially if, like, say, some software too that you're using, the Adobe subscription that you pay for, some other, maybe the antivirus that you're paying for. Things like that also help reduce your income, so to say.
Right. So now, what are some things are some new things that have come up that in your experience are different this tax season from last?
Definitely for 2019, there's no healthcare mandate penalty anymore. So if you didn't have healthcare in 2019, you're not penalized for it. But starting 2020, January 2020, California enacted the mandate now. So you have to have healthcare coverage through California or anywhere if you're a California resident. Otherwise, you'll get that same penalty that the federal had.
Okay, so that's really good to know.
Yeah.
So we have to still be able to prove that we have health care.
Correct.
2020. So next year, when you do your taxes, right?
Yes.
Know that you have to show proof that you had health care in 2020 when you file your taxes in 2021, because if not, you'll be penalized.
Correct.
Correct?
Yes.
Okay. Well, that's a big deal.
It is, because during tax season last year, everyone thought, oh, there's no penalty.
Right.
Here comes California sometime in July or August after a lot of people filed, and they enacted it. So, I think you may hear some commercials talking about it. So it's not just something that you're trying to sell.
Right.
It's actual.
It's the truth.
The truth.
Right? They're not just trying to sell you insurance. It's the truth.
Yeah.
You actually need it.
Yes.
This season coming up. Okay. Now, thank you for answering all those questions. Now, for those of us who are concerned about what should we do to better prepare next tax season, so that we're not stressed out all of January trying to get all that information into our accountants. What are some things that we can do to make next year's filing not so stressful?
Start now.
Start now.
Preparing your income and expenses now. It's January now, so you can't go wrong. But
Right.
if you're catching up from last year, catch up first to that,
Right.
and then pick up where you're doing. At least then start on a monthly or weekly, monthly, however you wish to do it, basis of recording your income and expenses, right? It's
Yes.
always easier when it's fresh in your mind than 6, 8, 10, 12, a year and a half later that you're trying to do it. Right? So, always be proactive in doing things, right? They say always the best, and it actually is the best, right?
Yes.
So at least then it's like once you do it, you could say, I'm done. I know how I'm doing. Plus, if you're up to date with your financials, you know how much money you've made.
Exactly.
So you get to budget yourself going forward, or make sure you pay for your quarterly estimated taxes, right?
Yes.
Right. Self-employed, you're not like an employee where you have a W-2 and have taxes taken out automatically.
Right.
You have to be proactive in paying your quarterly estimates.
Right.
So that's April 15th is the first quarter, June 15th, the second quarter, September 15th, the third quarter, and then January 15th for the fourth quarter. So you have to be proactive in trying to make sure you make those tax payments. Otherwise, you're behind in there.
That's right.
So, it's always better to do things right on the get-go. If you could do it daily, great. But not everyone's like an accountant like me to do it daily.
Right.
I don't do it daily. I'm just kidding.
I was going to say, wow, that's discipline. Well, you know what? This has been helpful. It's been very helpful. I have to admit, it's a little stressful because, tax season is always stressful, in my opinion.
For the last one,
Yes.
I could send you an Excel template that if your viewers want to
Okay.
use as like a starting guide, maybe that's where you can email up to.
I would appreciate that, definitely, so that they can start fresh. So the taxes that should have been done and ready to go to the accountant this year, we may not be there, right? We might be kind of playing catch up and stressed out and trying to get all of our ducks in a row and remembering what we did last January. So we'll get through this tax year. But Dustin's going to send us an Excel spreadsheet that I will share with you so that in 2020 we can do things right. We can get our taxes done correctly on a monthly basis for those who are 1099 and entrepreneurs. You can do your quarterly taxes properly. This will help. So Dustin, I just want to thank you for all your helpful hints. Now, is there anything else we should know? Any question that maybe I didn't answer, that information you want to share with us so that we do this right, not just this year, but every year?
Okay, there's maybe a lot of people who listen to commercials and say, create your own LLC.
Yes.
Right? That's probably a big thing, is create your own LLC. It's easy, it's cheap, things like that. So just remember, the first year you create it, there's an $800 tax.
Yes.
That's considered like your liability protection, so to say. So no matter what, that's due 2.5 months after you create your entity.
Yes.
Right? Then there's always a statement of information that's only $20, right? And it's every other year for LLCs. But if you miss that, it's $250 penalty.
Wow.
So make sure you don't just throw every postcard you get away.
As a new business owner, do not throw those postcards away. Read them and make sure you do what they say, right?
Yeah, so make sure you look at it. If you have a advisor, then ask them what it is, so at least they could give you advice. When you create your LLC, you're going to get a bunch of junk mail.
Yes.
And usually the things that you see on the envelope, it says this is not a government agency or a government letter. That's the junk. Right? They're going to be trying to get money out of you to file that statement of information for you for $150 instead of you going online and paying $20.
Right? And doing it yourself.
Yes,
right.
exactly. So, no matter what, LLC always $800 tax, and then there's thresholds for how much money you're making. So, when you create the LLC, there's a packet that comes with it, but there's a gross receipts fee. So it goes from, anything above $250,000 of gross receipts goes to $900 LLC fee.
Right.
And then it goes up, after certain thresholds. So just check on that, and you'll see what the amounts are.
Wow. Definitely. That's important. I'm glad you brought that up. I want to thank you so much for coming into Girl Talk and helping us stay out of tax trouble. We want the IRS to be our friend. We don't want them, raising red flags and sending us a bunch of letters and all of that. We want to make our 1099 experience and being entrepreneurs, we want to make that a great experience, because that's really what it was meant to do. It was meant to give us more freedom, give us more ability to create income, and not to get us into tax trouble. So I want to thank you so much for coming in, Dustin. This has been amazing, and I will keep this and I will share that spreadsheet with my listeners. So thank you again for coming. I just want you to know that this for me has been, it's informative. Creatives, listen all the way through. Those of you who have your own businesses, this is really important. That's why I asked Dustin to come in to do this in this time period so that we can get our taxes right. It's only one portion of being an entrepreneur, but it's a very important portion. So I thank you for listening, and we'll see you soon.